Thank you, Ruchi. Good afternoon, everyone. This is Swati from the Investor Relations team at Nucleus Software. A very warm welcome to all of you for Nucleus Software earnings conference call for the first quarter ended June 30th, 2020. For discussion, we have here from the management team, Mr. Vishnu R. Desai, our Managing Director and Acting CFO, Mr. R.P. Singh, CEO, Mr. Tapan Jaiswal, colleague from Finance team, Mr. Parag Desai, Executive Director, Mr. Avnish Dutt, Executive Vice President, Global Head Strategy, Mr. Pankaj Dutt, Chief Transformational Officer, Mr. Prakash Pai, Chief Evangelist Officer, Mr. Pradeep Kapoor, Global Head Corporate Affairs, Ms. Devyani Sinha, Global Head HR, and Mr. Ashish Khanna, Business Consultant Financial Inclusion. As we all are aware, Nucleus Software does not provide any specific revenue earning guidance. Anything which is said during this call, which may reflect our outlook for the future, or which may be construed as a forward-looking statement, must be reviewed in conjunction with the risks that the company faces. An audio and transcript of this call would be shortly available on the investor section of our website, www.nucleussoftware.com. With this, we are now ready to begin with the opening comments on the performance of the company for the quarter ended June 30th, 2020 from the MD, and post that we would be available for the Q&A session. With this, I now pass over to Vishnu sir.
Thank you, Swati, and good afternoon, ladies and gentlemen. I'm pleased to connect with you at this earnings call, which takes place in slightly less than a quarter, as the last one had got held almost after 2 months of the close of the last quarter. As we are noticing, the situation continues to be uncertain all over the world, with some countries managing to slowly get out of the thralls of COVID-19, while the rest of them getting deeper into it even 6 months after the outbreak. While there is talk about the vaccine, we are still far from getting the date by which it will be ready, and then date by which it will get administered to large populations like India. So as can be expected, the board and the management are keeping a close eye on development and are and will continue to take decisions that are in the long-term interests of the variety of stakeholders. Simultaneously, we are making an attempt to convert this calamity into an opportunity to learn new things and learn them fast. For example, apart from continuing to deliver value to all our customers in our conventional and new ways, we have created a platform where completely new ideas are being explored. We are confident with this new approach to looking at our role as solution provider, we will continue to not only enhance our award-winning world-class solutions, but also come up with new solutions as well. Over to you, R.P.
Thank you, Vishnu, and good afternoon, everyone. Frankly, this quarter will go down in history as a special one, I think, for a lot of us. But I think really happy that we responded to the COVID fallout with 3 steps that we took, or rather 3.5 in a way. First step was to establish full business continuity. I think we excelled at this, and we transitioned into work from home much before the lockdown really hit us. And our timely actions ensured that customer was not impacted at all. Service levels of product support were maintained seamlessly. Product releases, just to remind you, the 6 monthly releases we used to come out with, including special service packs, were all rolled out on as per schedule. And I think I do feel that the revenue numbers which are visible are a direct result of the service quality that we maintained and delivered to our customers despite the COVID situation and the work from home environment. As a second step, we assessed the possible outcome of the pandemic in terms of its size and length and its impact on business. We quickly took some drastic decisions on expense control. We decided to hold back some rather necessary and critical expenses as well, basically in order to get some more time to understand the uncertain circumstances which are still in front of us. This has resulted in an EBITDA numbers which are also visible in this quarter one of this year. Of course, needless to mention, the EBITDA numbers that are visible today are not a new benchmark because it is still a result of many critical expenses that we have held back temporarily, just so that we can get some breathing time to check how the future unfolds. The third step was to align practices and product to the new normal. I think a lot of us have been talking about the new normal setting in, and it's pretty clear that while the COVID situation will continue for a longer period, even thereafter, the new normal will set in. So implementation methodologies which were more dependent on physical presence have undergone a change at Nucleus. While we are still working on bringing in more changes, all our ongoing implementations are going on smoothly in our adapted remote implementation practice that we have put in place. The other dimension of the third step was on the product roadmap. So we've also attempted to align our product roadmap to the unfolding new normal. The situation is demanding high digitalization from financial institutions amongst other process changes. In this quarter, we were able to quickly release new digital channels like the WhatsApp, self-servicing, email approvals, and many other work from home enabling or self-service enabling capabilities in our product. The teams are continuing to comprehend these new needs that are evolving and rapidly aligning the roadmap to the same. Net, we are at Nucleus all happy to have delivered a satisfactory Q1. I must say that teams have really responded proactively and responsibly in the tough times that the whole world is reeling under. Thank you very much. Over to you, Tapan.
Thank you, Ati sir. Good afternoon, everyone. Key highlights from financials are our consolidated revenue for the quarter is at rupees 128.4 crores against rupees 138.2 crores Q-on-Q and rupees 124.1 crores Y-on-Y. Overall revenue in foreign currency, including Indian rupees revenue, is $17.3 million for the quarter against $19.4 million Q-on-Q and $17.7 million Y-on-Y. Product revenue for the quarter is at rupees 107.1 crore against 111.9 crore Q-on-Q and rupees 97.2 crores Y-on-Y. Revenue from projects and services for the quarter is at rupees 21.3 crore against 26.3 crore Q-on-Q and 26.9 crore Y-on-Y. As for expenses, cost of delivery including cost of product development for the quarter is 62.6% of revenue against 60.9% of revenue Q-on-Q and 69.4% of revenue Y-on-Y. In absolute terms, this is rupees 80.4 crores against 84.2 crores Q-on-Q and rupees 86.1 crore Y-on-Y. Marketing and sales expense for the quarter is 1.6% of revenue against 5.2% of revenue Q-on-Q and 7.4% Y-on-Y. In absolute terms, this is rupees 2 crores against rupees 7.2 crores Q-on-Q and rupees 9.2 crores Y-on-Y. General and administration expenses for the quarter is 6.9% of revenue against 11.3% of revenue Q-on-Q and 8.8% Y-on-Y. In absolute terms, this is rupees 8.9 crores against rupees 15.6 crores Q-on-Q and rupees 10.9 crores Y-on-Y. EBITDA for the quarter is at rupees 37.1 crore against rupees 31.2 crores Q-on-Q and rupees 17.9 crores Y-on-Y. Other income from investments and deposit at rupees 10.7 crores against rupees 8.7 crores Q-on-Q and rupees 8 crores Y-on-Y. Total other income for the quarter is rupees 13 crore against rupees 10.3 crore Q-on-Q and rupees 6.5 crores Y-on-Y. Net profit is at rupees 36.3 crore for the quarter against 28.1 crore Q-on-Q and rupees 16.6 crores Y-on-Y. Earnings per share for the quarter is at rupees 12.51 as against rupees 9.69 in the previous quarter and rupees 5.71 in June 19 quarter. Revenue contribution from the top 5 clients for the quarter is 29%, which is same as previous quarter. The order book position is rupees 450.4 crores, including rupees 404.4 crores of product business and rupees 46 crores of projects and services business. In March 31st, 2020, the order book position was rupees 444.2 crores, including 405.5 crores of product business and rupees 38.7 crores of projects and services business. Total cash and cash equivalent as on 30th June 2020 are rupees 613 crores against 559.2 crores as on 31st March 2020. This includes balances in our current account of 34.3 crores, various schemes of mutual funds, rupees 349.1 crore, rupees 55.1 crore in fixed maturity plans, fixed deposit with banks of rupees 10.5 crore, investments in tax-free bonds of rupees 101.4 crores, rupees 42.4 crores in preference shares, and rupees 20.3 crores in investment in fixed deposit with NBFC. With regards to receivables, we are at rupees 80.1 crores against 90.2 crores in the previous quarter. Now I'll hand it over to Swati.
Thank you, sir. With this, we are now open for the Q&A session. I will now pass it to Harpreet. Over to you, Harpreet.
Thank you so much, Swati. With this, we will open the floor for Q&A interactive session. Participants, if you wish to ask a question, you may please press 0 and then 1 on your telephone keypad and wait for your line to be unmuted. I'll repeat, you need to press 0 and then 1. First question of the day we have from Barjatia from HNI Investments. Your line is unmuted. Please go ahead.
Providing this opportunity. So obviously very good set of numbers. But so this sales and marketing cut that you have done. Now given the times of COVID, things have definitely changed the way we are going to sell our product. A lot of travel will be restricted and all these things. So do you think for next 1 year or till the time the COVID situation is not resolved, our sales and marketing will be at same level in spite of our marketing effort getting affected? Hello?
Yeah.
Sorry, I was on mute. So, thanks. That's a valid possibility. I think the way we are looking at it, you're right. I mean, there are some cost cuts which have been imposed by COVID itself, and some which are voluntary. To be very frank, the travel cost is something that probably will obviously remain under a huge lockdown because of COVID till the COVID situation improves. Thereafter, I mean, to be very frank, at this moment, it looks like the new normal would also be a lower, travel situation. I hope that's the new normal that we set into. As far as marketing is concerned, you're right. I mean, a lot of our expenses used to be on physical events, which are also under a lockdown. But we are always, with the numbers improving and then the situation not being, unfolding well. I think we will look at options of alternate ways to spend the marketing dollars. I think that may move up over the next quarters, but it just that is as and when we find effective alternate ways of using that, investing that those funds. So at this time, as I mentioned on the talk, that we've put a total ban on any expenses. So this is a very unique place, but slowly we will look at alternate modes. And there are options which are available today, so which may not be as expensive as standard marketing expenses, but let's see how things unfold and how we can, because we need to be active. We need to keep traction on with our customers and prospects. So we will find alternate ways of engaging them.
Right. Okay, got it. And lastly, I'm sure a couple of other people will also raise this question that we continue to accumulate cash, and I cannot find a year in company's last 2 decade history, or even if you go through at the time of IPO, in last 2 years of the IPO, before IPO as well, we have not lost cash in any year. Now, in spite of that, we continue to hold that. Cash in the balance sheet now, it is near about 600 crore, 600 crore. So there has to be a plan rather than just to have that money in low yielding asset, because ultimately, while the shareholders might have better option to deploy all of that money, I understand the conservative approach of the management, and that is where the disconnect is. Probably management is more conservative and shareholders would probably like to use that money for some other productive purposes. So I would sincerely request management to that being conservative is good for the shareholders, but there should be relook at the dividend distribution policy of the company.
Yeah, thank you for your continued interest. This is Vishnu, and as we have been mentioning in the past, we would like to be conservative, and as you have noticed in the month of March, in fact, we had to decide to revoke the interim dividend that we had taken, and then we are of course live to the situation as it is unfolding. So we've given the interim dividend also, and we will at the same time continue to be conservative.
Yeah, okay, that's it from my side.
Thanks for your question. Next we have Rajiv from Doordarshi Advisors. Your line is unmuted. Please go ahead.
Yeah, great. Thanks for taking my question. My first question is, it seems to me that the Q1 results came out quite strongly as compared to the guidance or as compared to what we had mentioned in the Q4 con call, where we were very concerned about, the NBFCs not dispersing loans, and that may have an impact on the company. So can you please elaborate on what you think has changed between then, when we had the con call, and sort of the subsequent period, which gave us an opportunity to provide these type of results?
So we must appreciate that at any time we do operate with a lot of work in hand, and so one point is, of course, there is work in hand. We are moving ahead with that. The first thing that we had forecasted is impact actually more on new sales, and I think I must say that even there we are pleasantly surprised that we were able to book orders. So there is definitely a very bold approach that businesses are ensuring, and probably we are also fortunate to be working with the stronger businesses who know that they have to utilize this period for probably consolidation and creating competitive. It's very clear that the fact about bookings being low and business being slow, that is a fact still, by the way. I mean, that fact is pretty much there. Of course, I must say that it's definitely higher than what we had envisaged, and Whether this is going to continue this way or, you still can't forecast the next quarter. But the signs are definitely that everyone is taking it in a way more aggressive manner, which is really nice. So there is of course still mixed signals from various corners. There are some countries who are opening up, and we see a lot of traction in some of the countries, and there are other countries who are going slow. So there is still that mixed thing. And of course, probably we are 3 months more, aware of what this pandemic is leading us to. So it's a mix of all that. I mean, that's what I would say. And the first quarter, in any case, everything is, a lot of the revenue is from work in hand, which could get impacted for sure, but something that has been secured.
Got it. So Indian Geo, clearly Indian Geo performed very well for us, and even Australia, I think where we have been having a very decent traction, has continued to perform. Some of these.
That's right, and Sorry. No, you carry on. Just complete.
Yeah, so I just wanted to understand from your perspective, what are the geographies that you feel pretty excited about, both in terms of what you have in terms of orders, but also in terms of prospects currently?
So, from a prospect perspective, as well as combined with, I think, the COVID situation, I think, and as you would know that one of the Australia is doing pretty well on the COVID side, and thus would continue to be promising. And isolated countries in the Southeast Asian belt are handling the COVID well, and thus continue to be. So overall market probably is impacted, but we still have these pockets of countries who have managed the COVID well, and thus we can see a lot of traction continuing. I mean, not getting stretched like in some other countries.
And would you say in some of these geographies you have actually gained market share, or is it that the spend has actually gone up in these countries?
In any case, wherever we have gained is because of market share.
Okay.
And of course, every different region has different spend patterns, but I think we would have largely benefited from market share.
In AGM, I think Vishnu had mentioned about a new product that company is working on. Is there any timeline around that new product, and at what point would you be willing to share some details around that?
Okay. As far as the new product is concerned, it till the time we get some traction, it is work in progress. So the kind of product that we are talking about, it involves changes in the very way we make payments, and that too at the grassroots level. So we are on an ongoing basis. We are do field tests. We are learning from the field tests. How the masses at that level are appreciating or not appreciating some of the things. So it is essentially work in progress, and till the time we see a very clear track, that's how it is going to remain. So that's all we can say at this juncture.
Sure. Lastly, on the other expenses, I think previous questioner also asked you on that. I mean, I think we have controlled those expenses very tightly, which obviously drove our EBITDA quite nicely. As you said, the travel possibly will remain, but maybe the marketing cost will go up as you see opportunities. So what could be a good base to consider for other expenses? If you can give some sort of a sense of how much can this go up by from Q1 as you see opportunities to spend money on the marketing side.
So while I may not be able to give you a percentage or a number, but I do want to mention that while travel and marketing is the easier one to look at, we've actually held back a lot on the personnel side. We've held back on at a senior level on incentives of last year. We've kind of nullified incentives or variable pays for this year. We have, by the way, we have confirmations or kids on probation who are pending confirmation. We're kind of holding those. Those are really the necessary expenses. So the personnel is expected to go up as soon as we feel a little more comfortable about the situation. Increments, as I mentioned, has been held back. So there is a lot of personnel-related expenses that directly on remuneration or even otherwise on welfare. I think we've held back in addition to any of the standard SGS stuff. So while in the COVID situation the travel is not going to come back, but marketing, as I talked of alternate method, but the personnel is something that we will consider as we move on. I mean, one by one. There's just multiple decisions we have taken on the personal side. Vishnu, anything to add?
I think we are making sure that the tough balancing between multiple stakeholders is as close to what it should be as possible. Yeah, sorry, you're asking another question.
Yeah, I was going to ask, the personal expenses will show up in the employee cost line, right? And so that is where one would, right? So the financial year 20 numbers, we could put some additional sort of inflation factor on top of that as your base run rate. Is that the way to think of that?
So one is the inflation and one is the held back stuff. There are, as I said, probations which are pending, and then those probations that are at entry level, which are kind of a bigger jump that we give. So it's that in addition to the inflationary increment that we would probably consider sometime.
Okay, great. Thanks a lot. Those were my questions.
Next we have Vipin Shankar from Trendlyne PIMS. Your line is unmuted.
Thanks a lot for the opportunity and congratulations for good set of numbers. First of all, I just wanted to check with you that recently Reserve Bank has permitted small value offline transactions for single payments up to 200 on pilot basis. So with this approval, how will be the traction on our product of Paisa will be there?
Yes, that's a very good question, and we are in regular contact with RBI, and immediately after their announcement, we reached out to them. We were talking to them in any case, and after the announcement, we got in touch with them once again. So yes, we are hoping that we will be able to get a pilot going very soon.
Okay. So how far it will take? How much time?
Support from RBI.
Okay. How much time it will take?
Yeah, as I mentioned in the answer to the earlier question, these are solutions which are going to change our habits at grassroots level, habits which have been around for centuries and so on. So there are lots of nuances that have to be looked at, modified, enhanced before you can make an impact at grassroots level. we are noticing good traction in some pockets, but we would not be able to put a timeline as to how soon we'll be able to turn the corner.
Okay. So is RBI showing any timeline in case of national launch from this pilot launch? So what kind of timeline they are referring to?
No, as of now they are only talking about pilot launch. They haven't not talked to us about national launch yet.
Okay. And also, how has been this order book pipeline considering the focus of financial institutions now more towards collections and also bringing more efficiencies? How are we seeing pipeline?
So I think as Tapan had shared, we have booked new orders this quarter. I mean the traction. So the pipeline continues to be strong as earlier. It's just that I think the conversion is not at the same rate. There are people taking decisions, and there are people who are wanting to just watch for another month or two and see if there's anything else behind it. So I think it's a question of so the need, demand, traction, and pipeline exists. Let's see what impact the COVID has on the sentiments as we move forward. Otherwise, it is looking okay.
Okay. Lastly, Q1Q we have seen like 15 crore kind of decline in other expenses. So out of this, how much do we expect to be sustainable in the coming quarters?
So, Vishnu, if you can add to that, as I mentioned, I think at this moment we are holding back everything. It's when and how much and when do we release the necessary expenses is something that might unfold in not everything in this quarter, but I guess in the coming quarters. So it's difficult to quantify it, but as I mentioned, there are personal expenses we are holding back, and we probably will take multiple small decisions to go ahead with those expenses, not just in this quarter, but going forward as well.
Okay.
Vishnu,
So at least, yeah. So the way additionally I would respond to what RPS further add to what RPS said is, while the first quarter has gone off all right, and the second hope would be all right, we are still reasonably unclear about what is the impact of all this on the next 2 or 4 quarters. So that being the case, being conservative, we do want to be very, very carefully trying to balance the entire situation, and then take the various decisions. As RP said, we'll take smaller decisions which will help us do that balance.
Okay. Thank you and all this.
Thank you.
Next we have Milind Shah from Urmil Research Consultancy. Your line is unmuted.
Hello, sir.
Hello.
Hello. Congratulations for excellent number in this difficult time. And my question are taken over from other questions. So it is okay, and congratulations. Best wishes for next quarter.
Thank you. Thank you very much.
Thank you. Yeah.
So next we have...
Thank you very much. I do want to mention, Milind, that especially on the bottom line, the number is impacted with a lot of held back expenses. So please do understand that these are, which is something that we will have to release. So that I don't want you to expect this as a benchmark, because we are holding back.
But you have the excellent job in this difficult time. So it is a grateful for.
No, definitely. No, thank you very much. It's really very hard work done by the teams. Yeah.
Yeah. Okay.
Next, we have Samarth Singh from TPS Capital. Your line is unmuted.
Yes, hi. Thank you for the opportunity. Only one question. And I realize we had some order wins this quarter. Did we have any new client wins as well?
If I'm not mistaken, most of them are new client wins. Of course, we've been pursuing them for a while now, so a lot of them are new client wins. Yes.
That's great.
Tapan, would you have a number, or we could share the number again later?
Hello.
Yes, Tapan.
Could you repeat again, sir?
The new customers, or is it existing customer, new business? So the question was, are there new customers signed up? And I mean, I can already count 4 new customers, but if there's any specific numbers, or so just to say from a sentiment time, this is not rolling business, but we've actually added new customers as well, which is very inspiring, to be frank.
And yeah, that's very impressive. Rest of my questions were answered. Congratulations to management on sponsor of this. Thank you.
Thank you.
Next is Umang Shah from MSEC PMS. Your line is unmuted. Please go ahead.
Yeah, thank you for the opportunity. My first question is that the moratorium is going to be not expected to be extended beyond 31 August. And some of the customers that you have are very small NBFCs in India. So for now, at least, are you anticipating any stress from your customers with respect to payments or with respect to their loans?
See, that is the uncertain times that we live in. So you're right. I mean, this could have some cash flow impacts on a lot of customers, and a lot of the customers, I can tell you, are also re-reviewing their priorities, their expenses, their investment decisions, and we don't know which way those decisions go. So you're right. I mean, the moratorium will put, and forget the moratorium, and I'm absolutely sure there's a lot of restructuring, and RBI talked of restructuring as well. So there's a lot of restructuring which is also expected, and some people may be able to manage that, and some may not. So we don't know how it will unfold, and that is the uncertainty of life today, I think.
Perfect. Thank you. This is helpful. So you've not provided for any of these expenses till now, right? Like any anticipation of any non-payment or anything?
I think we've done it only for what is visible.
Okay.
Clearly visible.
Okay. Second question was, sir, if you could tell me what percentage of your installed base has migrated from FiN1 to FiN1 Neo, or is it such a way that the legacy system will remain to be legacy system for more time to come?
So this will have to go back a few years. Actually, we very deliberately decided to, we had a lot of happy customers on the older system, and they were satisfied and wanted to, stay put with their status quo. And we actually, a few years back, we took that decision that, we are not going to make it a revenue generating machine that everyone has to move out. We just need to keep our customers happy. And that is how it is. So relatively, at the moment, a larger part of the customers, not total customers, larger part of the original customers are probably still on the older platform. However, I think we are now, moving coming back to them because there is huge value that they can derive out of the new product, which has really matured over these years, and we are always welcoming them to move over to the new model. So currently, yes, there is a lot of them, but we are in the process now to move them. We were going slow with them earlier because they were kind of happy.
Okay, and sir, what we observe with some of these large companies in software like Adobe, they moved from a perpetual license model to a subscription model, due to which initially there was a significant drawdown or degrowth in their revenues as the clients continued shifting. And then over a long term, the revenue stabilized and they became more profitable. Do you think something like that is also going to be visible in Nucleus, or is it going to be the case that because you have such a steady state base of FiN1, the revenue delta won't be affected to a significant extent?
So, see, the drop is also because of if suddenly a lot of the customers convert into this. So a lot of you're right about the customer base. There is a steady base. But having said that, let me mention that for the last 3 years we've been now offering transaction-based pricing also to our cloud customers. And I mean, it's not fair to compare, but just for hypothetical situation, if that was being booked in the traditional manner, the numbers would have been different. However, we are at this time, going transaction based, so that there are seeds of future growth which are getting sown at this time, and so we have a combination. We will, because of the approach of some of the larger customers who probably prefer to stick to, for the moment, capex based and like traditional pricing models. We probably have a good combination moving, but we are definitely going into transaction-based pricing. It can have some growth number impacts, but I don't know whether it's whether it will largely impact, and that would be only if we go the same way for all our large customers. So, Vishnu, any comment?
Okay. No, I think that's the right way to describe. This is a very thanks for bringing that Adobe example, and this is a very interesting phase in a life of a product company where you are moving from a one-time sale to this recurring revenue, and then we are also quite excited about it in a way as to how our customers are going to like it or leverage it rather.
Okay, perfect. Thank you so much, sir. Wish all the best to you and all the Nuclei.
Thank you so much.
Thank you.
Next is Amit Joshi from Care CMS. Your line is unmuted.
Yeah, thank you for the opportunity. So we just wanted to know, because of this COVID thing, whether there has been some sort of a shift in the way this lending is being done, or do you believe, because what I'm trying to understand is, because you mentioned that you were expecting in the last con call that things are very uncertain, we don't know how things would work out, etc. So despite that, the customers behaved aggressively, is what you mentioned in your comment. So I'm just trying to understand what made them, your customers, to kind of build it aggressively, or some steps. So is there some change that has been there, or is just probably a one-off quarter behavior of customers, you believe?
So I'm sorry, but I will unfortunately probably still say that the future is uncertain, because let me share with you that while while the numbers are good and we've got new orders and everything, but at the same time, by the way, we've also had situations where there are some customers of ours who were, small startups. They've actually closed down. I know one of our customers sold his portfolio to another customer and exited from the business. So there is all that happening as well. So there is lots happening on both sides. So why I call it uncertain is because, this time we had the aggressive ones with interaction with us, and tomorrow there could be different types. So that is why we still think it is uncertain. It's not as bad, and I think definitely it was not as bad as we thought, but also it could be because of let me even go to the extent to say that some fortunate wins here and there we were talking to the right customers. I mean, that's the fortune that probably that we've had. So I think there is no doubt that the whole industry is facing pressures on various fronts. And as you mentioned, a lot of the customers will need to alter their own processes, by the way. They will have to go digital. They will have to have far more technology supported operations. Now it's a question of who have the funds to make that happen. Some may not be able to do it in time or not afford it. So those are the combinations which will happen. So while we were very uncertain last quarter and we've done pretty okay, I would still say that while things are looking better, but we are still uncertain. I'm sorry to repeat that same statement.
Oh, okay, got it. Okay. And on the front of, of course, I think this has been a question probably being repeated year over year, the cash that is lying, and, so how do we, in terms of any inorganic, first of all, what about our existing products that we have? What kind of potential you believe is left to be exploited out of it, and pursuant to which, you will get an incentive to move or use your existing cash to go something inorganic? I'm trying to link the two questions, but I hope you got my question.
Yeah. No, absolutely. So,
okay.
Yeah.
So the way I will attempt answering your question in following ways. One, talking about how much is the potential left in the existing products, I would say huge. We've just about scratched the surface, and there are markets, there are geographies where this product could have direct, this product would add immense value directly. We're just getting the word across, and that is what is taking time. So that's answer to the first part of your question. The second part is about the inorganic opportunity. What we feel is that the challenges of cultural alignment, challenges for the cultural alignment when we do an acquisition are substantial, and hence we would put the cash to use for our internal maybe accelerated explorations or development, and that's how we'll go about it, rather than going about in the manner of acquisition.
So rather than inorganic, you would prefer to develop on your own rather than acquiring something else.
That is right. We feel that we are in much better control, and that's what we would like to do. We have built a reputation which we would want to further enhance.
Okay, okay. So any plans in that direction? I mean, you have like, of course, couple of products which you mentioned initially in the pipeline, etc. But something big enough which would allow us to go to that next level, something in parallel to an inorganic growth. Of course, not exactly, but since the approach is different, but still something on that side. Any thoughts, any plans?
So the immediate opportunity. Sorry.
No, please go ahead.
Okay. So as Vishnu mentioned, that the opportunity that we have right now, and considerable opportunities in the same product, because we are, if you look at the market share of the global world, I think we are far short of where we need to be, and especially in the advanced and the paying markets. And I think that is a big opportunity with the current offering itself. So, and that means that a little bit on what Vishnu was mentioning, that if we have to then now spend on entry into various regions, geographies, market segments, I think we would rather use that there than in an a buyout or something like that. We'd rather spend to acquire and expand this current offerings and into the new geos. Okay. I mean, while we have 50 geos, we still have plus geos. We still have many geos where we have only one customer or two. I think those are the bigger opportunities we are sitting in.
Okay. So I'm just sorry. This is my last question, third question, but just to squeeze in that. So basically, the potential is quite big. Many geographies to be explored. You mentioned we have just scratched the surface. We are very strong in the product where we operate. The industry outlook is also reasonably decent in that sense. So what, with all these things and the financial strength that we have, what stops you from, taking those steps, faster, in terms of, taking those steps so that we can reach out to those geographies or those, we can tap the potential quickly, rather than slowly?
I think this is a very critical question, and
management bandwidth is a problem. I'm just trying to understand is what kind of resistance is that we are facing. So is a management bandwidth, because sometimes that happens. Management has a limited bandwidth to reach out to geographies, etc. So just trying to understand that.
So I think, and this question got raised in the AGM as well, and it's a very critical question. I think it's something that we also need to apply our thoughts to. But I think initially our whole thought process, especially now, was the revamp of the new product, and our ability to break into new markets. And I think we feel far more confident today with breaking into Australia, and our whole objective has always been to consolidate a region and then move to the next. I think with the product maturing the way it has matured, I acknowledge your point, and I think not only do we need to be a little more aggressive, and of course once you're aggressive, you need to create the bandwidth. Very clearly with the current bandwidth, it is always going to be limited. But the first point was that initially we prefer to enter a region, deliver value in that region, ensure that there is customer satisfaction in the customers, and then keep the snowball rolling. We need to look at how we can now roll 4 or 5 snowballing regions, and that is what I think we are more prepared than at this moment. So that is something that we need to unfold, and that is why we are confident that the current offering itself should be able to deliver value if we play this game well.
Right. No, I think that I think one of the quickly reason is that if our other income is around 1/3 of our profits that we generate, and if it continues like this, that percentage or the proportion will continue to increase. So that is the concern that we have over the cash utilization. But yeah, thank you so much, and thank you for taking so much time.
Thank you.
Next, we have Anuj Sharma from M3M Investments. Your line is unmuted.
Yeah, thank you. Vishnu, this question is for you. Based on the past 3-6 months and inquiries.
Sorry, could you repeat this last sentence again?
I'm saying based on the last 3 and 6 months, based on the customer inquiries and the demand trends, how do you see the demand evolving in the next 2-3 years? I know it's uncertain. You said it is uncertain. But any thoughts as to how the demand will evolve and how are we positioning ourselves to the changes, whatever you can think of the last 3-6 months?
Okay, I think clearly one clarity that is emerging is the banks and financial services companies are preparing themselves for the new normal by laying huge amount of emphasis on digitization of all their processes and running the banks again from if possible 100% of the bank employees being at home, especially the back office employees. So that is an indicator of how the demand is likely to evolve, and we are quite optimistic about that. And at the same time, we have to just add that sentence which you already said. Having said that, because how the next couple of quarters are going to unfold, no one is clear in the world. We are also uncertain. But this digitization is clearly a direction in which banking and financial services industry is going to move.
My next question is for RP. Hello, yeah. Based on our current existing client setup, how much more wallet share can we gain? I mean, I know we have new geographies and new clients as a lever, but on the existing client base, how much more functionality or how much scope we have to drive up revenues currently?
Okay.
So as you know, we yes,
please go ahead.
So okay. So getting the additional part of the wallet, I think there are 2-3 modes. One, of course, as I mentioned, we keep rolling out these new capabilities in the product, and there is the possibility of upselling those. We have 2 product lines, so there is of course cross-selling opportunities there. Just to mention that, independent of the product business, we do have a services business out of Chennai and Singapore who do custom build of solutions and build custom solutions, and that becomes the these 3 then form the mode for additional digital part of the wallet. However, I must say that for the product side, I think the new geos, new regions, and new segments is the bigger opportunity that we have in front of us. Vishnu, you were saying something, sorry.
Okay. Yeah.
All right. And my third and final question is, while you alluded to that some of the financial companies in India will go through significant uncertainty, and fortunately we have been on the positive side till now. Any list which you have drawn which points out that this percentage you might be wary of how the business models will evolve in the next let's suppose a year or so? Any challenging part of the portfolio which you have already seen some signs and you might want to be careful about?
Well, we've got some names on the watch list, but I think it's not. I mean, we're not doing still categorizing as NPAs as yet, but I mean, and then a lot of it is sentiment. So it's easy for some of the smaller and players where you can see they're running out of funds or they're not, they're too dependent on equity being raised, and so that those ones you can forecast a bit, because a lot of the businesses will probably have to last out the tough times. They're not going to amazingly grow. They will have to survive. It's not time to grow. It's time to survive and time to consolidate now. So it's really looking at. So I think the smaller ones is much easier to figure out. The medium and the large, you can have some sense, but and nobody saw ILFNS coming down, so I don't know what the rest.
All right. Thank you so much for the answers. Thank you.
Thank you.
Last question of the day we have from Rajat from HNI Investments. Your line is unmuted. Please go ahead.
Regarding the follow-up, so I'm quite surprised when you say that you have cut down personal expenses, because if I look at the numbers, last quarter your personal expenses was something around 77 crore, which obviously will include all the employee welfare expenses as well, and that has come down to 76 crore. But your operating and other expenses nearly half, and I'm sure none of the employees are going into operating and other expenses. So is it that the benefit of cuts is going to come going forward, and then afterwards then will reverse? Or, I mean, I'm just trying to reconcile your comments with that.
Yeah. So just to mention again, the bigger cuts that I talked of was on the variable pay of seniors last year and this year, a lot of the seniors, which of course is not visible, but it would have, would have hit us in the end. The other one I'm talking of is, so we have interns and on probation hiring which have been working, and some of our interns are running work with us for 6 months before they come on board. So they undergo a huge change, which is not a cut, but it is a necessary. It's more than an increment. I mean, one is you stop the increment, the other is onboarding what you had committed, and similarly our campus recruits that we had committed to hire. So those are the ones which are increments that we would have experienced. So that is, and then some of them are active with us. So some might still be some are still to join us, but some of them are already with us as interns and on probation. So those they need to be confirmed. So that is the kind of thing going upward.
Got it. So this would have happened, but we have kind of stopped it as of now, and going forward it will.
Correct. That's why you don't see it going down, but it is something that was kind of committed, which we've held back. So that way.
Yeah. And lastly, on the hedging policy, if I remember it correctly, we continue with the 6-month hedging policy, or has it changed, or what is the current hedging policy?
Vishnu?
Yeah, sorry.
Good. The hedging policy.
Yeah. So do we continue to have the 6-month hedging policy, or it has changed in recent years? And what is the current policy?
Sorry, what 6-month policy you are saying?
Hedging, forex hedging. Foreign exchange hedging.
Yeah. Okay. So what we have done is we used to have 50% of our next 6 months forex receivables as hedged. So from 6 months we have come down to 4 months. The board took the decision that okay, we are going to hedge only for 4 months. So that is the range we are in.
Right. It's a 4 months of receivables, and I mean, your receivables are not 4 months. So obviously, it will have some part of revenue as well. In terms of forecasted revenue, that's what I.
Yeah. That's right.
Yeah. And lastly, I'm sorry to raise this point again, but this is the only reason probably that company probably needs improvement, which is capital allocation. I would seriously request the whole management team to reconsider it. Apart from that, frankly speaking, everything is just working fine. It is just not for the current quarter I'm seeing, but I've been listening to your call since 2013-14, and I think we are just doing completely all right. But from a longer term perspective, this needs to be corrected. Otherwise, this will be a significant drag to our overall performance.
No, we continue to make note of this. We do hope that someday you would feel that we were right.
Okay, thank you. That's it from my side.
Okay, thank you very much.
Thank you. So at this time, there are no further questions in the queue. So I would like to now hand over the floor back to Swati for final remarks. Over to you, Swati.
Thank you, Hasri. So we would like to thank all the investors for joining us today for earnings conference call. I will now pass it on to Vishnu sir for his closing comments. Over to you, sir.
I would like to take this opportunity to thank you all for your keen interest in Nucleus Software, and I would reiterate our commitment on behalf of my 2,000 plus colleagues, Nucleites, for a long-term commitment to building value for all our stakeholders. Thank you very much.
Thank you so much, speakers, for addressing the session. Thank you, participants, for joining in. That does conclude our conference call for today. You may all disconnect now. Thank you and have a pleasant evening.
Thank you.